Hello. If you are an auditor of a company and your company is preparing financial statement manually in Excel, then it can be a riskier. Recently, ROC has imposed a penalty on auditor for non-disclosures in the financial statement. In this video, we will see what are these non-compliances. So this is the order of ROC, where Patna ROC has during their inquiry, they have given an order for certain non-compliances with relate to the financial reporting. Now this has cast a responsibility on auditor that they have not commented for those such a non-disclosure. We will see those one by one. The first contravention is that the company has not attached the cash flow statement along with that financial statement. Now as per accounting standard 3, certain companies which are not the small company, they compulsorily have to give the cash flow statement. So this company has missed that thing for all of these 3 years. So this is the non-compliances. This is one. Second contravention is that with respect to AS 18, the company has not disclosed the name of the related party and nature of the relationship. Even if you don't have a transaction with the related party, but the related name of the related party has to be disclosed as a part of the financial by way of notes to the account. So if that is not being done, then that is a contravention of the section 129 of the Companies Act. This is the second thing. The third contravention that ROC officer has observed over here is that the company has shown short-term borrowing of rupees certain amount, but they have failed to subclassify short-term borrowing as a secured and unsecured. This has to be for the short-term as well as long-term borrowing. It has to be classified as a secured as well as unsecured. So this is one of the contravention. Now we know that the preparation of financial statement is the responsibility of company, but here the observation that ROC has taken is that the same has not been commented upon by the auditor in their audit report. So the auditor has also violated the section 143 read with section 129 with respect to schedule 3 of the Companies Act. So that's why the responsibility over here has been casted upon the auditor that there is a non-compliances with respect to schedule 3. This is the third. The fourth non-disclosure over here is with relate to short-term loans and advances. So with relate to short-term loans and advances, again the company has failed to classify short-term loans and advances as a secured and unsecured. So as per schedule 3 also that this has to be classified, short-term loans and advances as well as long-term loans and advances has to be classified as a secured, unsecured and doubtful. If that has not been done, then it is a non-compliance. Again over here the auditor has not commented in its audit report, so there is a violation of section 143. The fifth contravention over here is that the balance sheet which company has prepared, in that there was one schedule as a deferred tax liability, but then there is a no corresponding head in the balance sheet. Hence it appears that the financial statement has not given the true and fair view of state of affairs. So this is nothing but the probably the company has prepared financial in Excel and they have not placed their cross check between the balance sheet and the schedules to the accounts, and the same has not even been commented upon by the auditor. So there is a non-compliances with relate to that also. The sixth and seventh non-compliances with relate to short-term borrowing and short-term loans and advances, those are same only. Now let us summarize this. So for financial year 2016-17, 17-18 and 18-19, the company has non-compliant with respect to this 5 non-disclosure. With respect to this company, there are actually 2 orders that ROC has given. The first order is with respect to the financial year 2016-17 to 18-19. Then there is another order with respect to financial year 19-20. So during the year 2019-20, the auditor has got changed. So they have separately issued a notice to that auditor with respect to the non-compliances. So with respect to financial year 2019-20, I have summarized the non-disclosures which ROC has observed over there. These are also primarily related to the cash flow statement which was not attached. Second one is the related party transaction. The company has not disclosed the name of the related party and nature of the relationship. The third one is the short term borrowing, which has not been subclassified as a secured and unsecured, and the fourth one is the short term loans and advances, which has also further been not subclassified as a secured and unsecured. So these are the non-compliances. Now let me show to you what is the penalty that ROC has imposed. So over here ROC has imposed a penalty for each year 10,000 rupees per year penalty that they have imposed. In the first order, they have observed the non-compliances for 3 years. So there is a total 30,000 penalty, which is under section 450, which has been casted upon the auditor. In the second order, which is related to single financial year 2019 and 20, so they have imposed a penalty for 1 year. There is the 10,000 rupees. So now let us see what is the base of the financial reporting. So applicable law is, one is the Schedule 3 of the Companies Act that we have to follow. Then accounting standards are there. So accounting standard whichever are applicable to the entity that we have to follow, and third one is the generally accepted accounting principle. So this is the combination of all this applicable rules regulation that we have to follow while preparing a financial statement. And if the company is preparing financial manually in Excel, then there is a high chances that certain disclosures which are there in Schedule 3 or which are there in accounting standard, those are missed out. So as a solution to this, we have designed the Schedule 3 automation tool, which covers all the aspect of applicable rules and regulation of Schedule 3 as well as for the accounting standard. So across India, more than 1,500 CA firms have already implemented this automation tool. Now in this, we have groupings that we have given. Now these groupings are compulsorily user will have to select as per the Companies Act only. So there is no chance that company misses any grouping which is not as per the law. For example, with respect to short term long term borrowing, you will have to further select that whether it's a secured, unsecured, whether it's from related party, non-related party. So by the mechanism of this tool itself, you will automatically get complied with rules regulation of the Schedule 3 as well as for the accounting standard. So with respect to qualitative disclosure, we have this QDIS. So over here, whichever disclosure is applicable to your entity, you can just click on the tab of that and you can fill the details for that. So this QDIS as well as RDIS serve the purpose of your checklist. So whichever disclosure is applicable to the company, you can fill the details for that. Further, we have even a tool for non-corporate entities as well. So as per the guidance note issued by ICAI, from 1st April 2024, accounting standards as well as the format issued by ICAI is also applicable for non-corporate entities as well. And from accounting standard applicability, there is a AA sheet that we have given. Now for non-corporate entities, these entities are divided into 4 different categories based on the turnover as well as the borrowing that company has. The entity classifies into the respective level of entity. Now it is, so you can even get to know that the entity falls under which category and which are the accounting standard which are applicable to that, which are the accounting standard which are applicable with certain exemption. For example, if we speak about AS 22, which is related to the deferred tax, it is applicable to the level 1, level 2 and level 3 entity, and for level 4 entity, it is only applicable to the extent of current tax. So for deferred tax provision, level 4 entity is exempt from that. So for all this kind of synopsis, you can get to know in this single sheet itself. At below this table, we have even given what are the exemption with respect to each standard has been available to the respective category entity. So myself, CA Vishal Mulchandani from Black Horse Excellence, we have been developing the automation tools for CA firms as well as for the companies from last 5 years. So you can reach out to us on the numbers details given over here. The demo as well as trial version is also available, and you can share this video in your friend circle, professional colleagues. Thank you very much for watching this video.